Welcome to Limit Up, the weekly capital market podcast. My name is Don Collins. I'm a chartered accountant and business advisor of 30 years and partner at Findex, a leading financial advisory and accounting services firm based in Australia and New Zealand. I'm here today with Ian Reynolds, trader and investor, former bank foreign exchange market maker, early investor in Bitcoin and tech founder. Welcome, Ian.
Hi, Don. How are you?
Very well, and yourself?
Yeah, I'm good.
Now, when I think about making money in stressed capital market situations are tough. A typical investment portfolio will often fail. The world is moving into really challenging times as the US tries to address the US $38 trillion in debt, the contradictory fiscal and monetary policy, internal conflict, and numerous wars. And the rest of the world starts to consider a new global reserve currency, a multipolar world, and aging demographics. So how can we understand what's going on in geopolitics and macroeconomics? Luckily, Ian is here with the Behaviour Capital's latest press release. Could Powell leave early? Ian, can you give us more details on that?
So last week, Friday, the US CPI numbers came in a lot lower than expected, following the employment numbers on Wednesday, which were higher than expected. So if Trump had written the script, he couldn't have written it any better. And the market, unfortunately, suspects that he is writing the script. But so the market doesn't believe any of it. But Powell must believe it. So his track record is very poor. The Federal Reserve track record is very, very poor. And they've got Trump trying to shoot him down, including lawsuits. I was just going, if I was Powell, and my legacy is now going to be, I thought inflation was transitory. It went up to nearly 10%. And now I'm trying to be the hawk and defend against inflation that seems to be going to zero. So
you mentioned in your release about following the Truflation course to zero. Can you explain what do you mean by that?
Truflation is a company that measures real-time prices, i.e. they go in via API to check various prices. So unlike the CPI report, which is months old and is surveys and assumptions that we haven't got time to go into because they don't make any sense, seems to have been a much better gauge. The correlation is 0.93 with CPI over the last 2 years that Truflation, I believe, has been doing this. Currently, the year-on rate that Truflation is measuring is less than 1%. And CPI numbers are coming out at 2.5%. So if Truflation was suddenly wrong, of course, I'm wrong. But it seems that inflation is going down in America and it's going to go down fast. And it's following the final appearance of the deflationary destruction from Chinese price collapses. Possibly collapse of the Russian economy. And other things. But regardless of what I'm trying to put the narrative around it, Truflation is saying it's going much lower. So if I were Powell, I'd just give up trying. And, he could just get out of the way and get in, wash the new guy, and let them get on with it.
You also mentioned about emulating Paul Volcker.
Paul Volcker was the Fed chair in the 70s when OPEC hijacked the world initially in 1973, leading to interest rates in the US of 20% or so. Fed funds rates. But anyway, very high interest rates to tame the inflation in the late 70s. And Volcker is Powell's hero by all accounts. He wants to leave. So Volcker's legacy is sitting in front of the Senate, puffing this massive cigar, being asked all these awkward questions, going, that's your job, sir. Anybody in the markets wanted to be Paul Volcker at the time.
Right, I see.
So, very respected, did a great job, saved the world from rampant inflation.
Yes. And so Powell
unfortunately, Powell's not been able to get anything right, basically.
Right, I see.
So my conjecture is maybe he would just go, I'm out of here. This is too hard. They're going to be arriving in May. Why wouldn't I get out of the way now?
Yeah, and they seem to be writing their story.
Yep. Exactly right. They're waiting outside that door for him to leave.
Yep, exactly right. Okay. What else has been happening?
Well, it's been a rather safe market at the moment. We've had the bust up with Bitcoin, gold and silver, and market is defensive. We're seeing lots of buyers, retail buyers of US shares, but lots of sellers as well, which is institutions. And markets are really at an inflection point waiting for the next move. The dollar is at support or below support, depending on which chart you want to look at.
Yep.
And we're all waiting for the dollar to make up its mind which way it's going. And when the dollar makes a move, all markets change one way or the other.
Right. So on that point about charts, did you want to show any of those charts in particular?
Well, should we go through as usual from left to right and take a look at what's been going on? Yeah, so different set of charts this week, but I'll have to call them each up individually. But this is gold, big blow off top, and we're consolidating, waiting for the next move. So not too much really going on there. The dollar equally this is a support line going back 11 years.
Yes.
And you can see we've dropped and we're consolidating. So the market is really undecided what to do.
Right.
We've seen a big change in dollar yen over the last few weeks as the yen has strengthened when the Prime Minister got in by a landslide.
Yes,
and you can see how the big move up from, actually before then, big move up from 140 odd.
Mm-hmm.
And it's really come right back in down to 153. This is the area in which supposedly the Bank of Japan or the Federal Reserve in New York might intervene. I don't think that actually happens because they talk about it rather than doing it because they don't want to use their reserves up. But everything has really steadied down quite a lot. If we go to, let's have a look at Bitcoin. Still under pressure. Has had a massive fall and is trying to recover, but it's not. Suggests there's further downside there. Ethereum, which is maybe one of our big bets of the year, looks terrible currently. Big drop.
Yeah, absolutely.
Bear flag here as we prepare to go down again. I think it's going down to 1,200 or something down here, and then it's a buy for tokenization of real world assets and the way in which things are done in the future. Let's have a look at oil. Here's Brent. So it also is consolidating after a move up, and surprisingly not higher, given that the Iran situation isn't red alert, but it's not far off it. And the Straits of Hormuz, every time this happens, everyone talks about that, right?
Yeah, sure.
But it hasn't, right? The market really hasn't done much. So I'm surprised about that. Bonds yields have gone down a lot. You can see this big move down, and this is after CPI and pretty much after the higher than expected jobs report that no one believed. And these are where the Fed has cut and rates have gone up, but now we seem to be reversing that. And I'm just thinking that if Powell were to walk now, the market could drive these rates a lot lower, followed by the Fed. confirming it
Yes.
with more credibility, and that will drive the cost to service the debt down, which doesn't get them out of the big situation.
No.
But this is the focus. Everything else, even Epstein, which may deliberately be false flags, i.e. trying to distract from the big issue here. Kind of think they've bitten off more than they can chew on that one. But
sure. Yes.
So rates, long-term rates have been going down. And the stock market, as we discussed last week, do you remember, it's kind of... I forgot to click one of them. Where are we? Let's go to the NASDAQ. I mean, it's not going down, but it's not going up.
No.
And is it preparing to go down? Well, lots of traders thinks it's going down. Lots of people betting it's going to go down because they love a good crash.
Of course.
I think that actually things will go up because, at some stage anyway, because there's no way they can deal with the debt problem without printing a lot of money. And that adds fuel to the fire with stocks, Bitcoin, etc. May not be now, but if Walsh came in, slashed rates, far more confident than a new Fed with a more convincing leader, we could get those long-term rates down loads.
Right.
The stock markets go, yes, here we go. We're being led better. We can go into a new place here.
Right.
Trump really wants to keep the stock market higher because it's obviously voters.
Yes.
So it just seems that everything, for once, in Trump's first year in this term, things are actually going his way. And if Powell get out of his way, things would be a lot easier for everyone.
So you mentioned earlier about the inflection point and we either go one way or the other. Is the trigger for that, as you said, Powell stepping aside, or is it something else that will trigger that?
Well, we don't know where black swans come from by definition. There's so many things it could be, Iran, Cuba, Walsh, Epstein. Who knows what's in there, right? But I know that the market is now poised. And even earlier, there's all rumours in the market that Palantir had been hacked. And Palantir being the platform that does what ex-readers like to call surveillance on citizens, whatever it is, right?
Yeah.
There's more data in Palantir than anywhere else in the world.
Right.
And if that's been hacked, that's going to be a big thing.
Right.
But there's all these things looming in the background. And I just think it would be so good if Walsh were to come in early, let's make a positive change and stop things going wrong.
Yep. Okay. Very good. What else is we're just going to start a Chinese New Year tomorrow, and that goes for 2 weeks. What does that do to the market? And
immediately it pulls out a lot of buyers of gold and silver because those are the markets that have been going up. Relentless buying of gold out of China, not just by retail, but by central bank. With silver, the same, for different reasons. There's a big shortage of silver on COMEX, supposedly, which is the US exchange. Whether they can save that situation, I don't know. But you could see a big whipsaw. Because the silver market, when it's been going down last week, it went down on almost zero volume. So you could say the real price, if the price on the screen is 75, you could say the real price is actually $70 to $80 before there's any volume in it. So it's going $10 in price without there being any real liquidity.
Sure.
And it finds liquidity when it meets it. So whether they can get enough physical silver to settle those trades, I don't know. But it's like everything is kind of been wanging around and is now just come back and is quiet for 2 weeks, hopefully, over the Chinese holidays. It's George Washington's birthday today, so the US is off.
Yep.
So I'm anticipating a relatively quiet week.
Okay.
But this year, you never know what's going to happen. It's only 16th of February, and it's had like 5 years worth of drama in
Yes.
6 weeks.
Which is not unusual for the stock market.
Well, we love it, but
Yes.
sometimes a break is okay as well.
Of course. And the other thing I see that you're mentioning is the FOMC minutes.
Yep. So given CPI, we're now going to hear what the FOMC said at their last meeting.
Yes.
Which, if it says, well, we're all scared about inflation, and inflation comes in lower and it's their numbers,
yes,
then they need to walk out of that room and all resign.
Right. Yep.
Because the market now doesn't believes the some of the figures are manipulated politically.
Yep.
So they're risking actually everything that Warsh could bring to the game by sticking in there when no one believes them and they've lost their trust.
Yep. So it will be interesting once you see those.
Yep.
So what's coming up next?
Yeah, it's a quiet week. That's it. We're just waiting for maybe some events to come out, but it's quiet.
Yep. Okay. Well, if was there anything more to add from that release you wanted to talk about?
No, I think that's it. I mean, in the release, it talks about the, after non-farm payroll came in 130,000 higher than expected, market didn't care.
Yep.
But since then, there's been a revision down for 2025 of almost 1 million jobs.
Yes.
So the revisions are way bigger than the actual numbers. It's just completely ridiculous.
Yeah, a bit contradictory and a bit hard to believe, as you said.
Yep, absolutely.
All good. All right. Well, thanks again this week, Ian, and look forward to next week's catch up. And thanks again for our viewers.
Lovely. Thanks, Don. See you soon.
Thanks, and all right. Bye.
Cheers.